What's up, everybody? Today we are going to be taking a look at the stock that everybody either loves to hate or they just hate, but they're still interested in it anyway, and the company is Intel. Now, you probably know that Intel, they've had a bit of a rough go of it here. They're down 65% over the past 5 years. I mean, if we go all the way out, they've never even touched this peak that they reached 25 years ago. A lot of semiconductor stocks have just exploded over the past few years, and it's like Intel just missed the bus. So what's going on? Is there an opportunity now that Intel is down so much, or should we just stay away? Well, when I look at some of the fundamentals for Intel, I mean, it looked pretty good all the way up until just a few years ago when we just see revenue fall off a cliff. And at the same time, their margins have just taken a nosedive. If we look, they were making about 30% operating margin for over $20 billion in operating income. But now operating income has just gone up in smoke. Their margins are negative, free cash flow massively negative. Their revenue today is lower than it was 10 years ago. And to make it all worse, they've also been diluting shareholders in the past few years just to raise capital and stay afloat. The fundamentals paint a pretty ugly picture of Intel. Now, when we dive into their most recent earnings, this is from a month or two ago when they released their Q1 earnings. Now, another thing to point out, Intel has a new CEO. Pat Gelsinger is out, Lip Bhutan is in. And a lot of times when a company gets a new CEO, I've noticed that the new CEO will often talk down guidance. They might try to set a low bar for themselves that they're confident that they can outperform. I'm not saying that's what's going on here, just something to keep in mind. Now, they say they delivered solid Q1 financial results and they're improving their execution, but we'll take a look at the numbers. We'll see if we agree with that. On this next slide, they say they're strengthening the balance sheet and monetizing non-core assets, which is corporate speak for we're trying to sell some stuff to raise money and stay alive. Now, on the next slide, we see what I think they were referring to when they said they delivered strong results, which is that they outperformed their previous guidance. Revenue was $500 million over their guidance midpoint. Their margins were above the guidance midpoint. But the absolute numbers really aren't that great. It's nothing to write home about here. I think they just had guidance that was really weak that they thought they could outperform. I mean, $12.7 billion in revenue. If we look at the last few quarters of revenue, that's the same as what they did a year ago. And gross margin is down significantly. They say it was above expectations on data center strength. But if we look at the next slide, data centers weren't that impressive. I mean, it's true year over year, the operating margin is a bit better, but this operating margin is significantly below their peers. Intel's bread and butter is still this segment here, the client computing group. This is basically all their CPUs that go into laptops. This is by far their most profitable segment, but even here, their profitability is down. Intel used to be just so far above their competitors here. Like comparing Intel to AMD 10 years ago was almost laughable. They were in completely different leagues, but you know, over 10 years, a lot of things can change. In tech, if you don't adapt to the next wave of technology, you can really fall behind. I mean, they call this data center and AI, but let's be honest, Intel is not getting a lot of business from AI-related activities here. Their data center growth has not been strong over time. And actually, just speaking of technology, this slide deck that they have is slightly blurry. I don't know if this is coming through on YouTube, but if you're a technology company, you should at least be able to upload your investor presentation with the right resolution to your website. I mean, just compare. This is a presentation for a different company. I mean, look how much sharper it looks. It's not that important, but it's kind of a microcosm for Intel in some way. All right, so let's talk about Foundry. Intel is different than a lot of other semiconductor companies. They not only design, but they also manufacture chips. A lot of people have argued that Intel has spread themselves too thin. I mean, NVIDIA, they don't manufacture chips, they just design them. AMD, they design. TSMC, they just manufacture. TSMC does not design their own chips. All those companies have tried to just perfect and dominate their segment. Now, Intel has made a lot of investments recently in their manufacturing segment, their foundry. If we go back to my sheet, look at their CapEx recently. $25 billion, $25 billion, $23 billion. Most of this money that Intel is spending is going into their foundry, building out their fabrication facilities. Now, a lot of that CapEx is being supported by the US government from the CHIPS Act. So Intel isn't footing the whole bill. But even with this support, I kind of have doubts about the foundry segment. Intel is going to be competing against TSMC and the other Taiwanese fabs. The fact of the matter is, it is just more expensive to manufacture chips in the US than it is in Taiwan. Now, Intel says that these massive negative margins on their foundry business, that they're going to be breaking even in 2027, and they might meet that, I'm not sure. But frankly, I have a hard time believing that they're going to be turning massive profit on Foundry when their competition is TSMC. When we're buying Intel stock, when we're betting on Intel, I think a lot of what we're betting on is that Foundry is going to be very profitable in the future. And unless there's some geopolitical event with China and Taiwan, or unless there's a lot of pressure for US designers to manufacture their chips in America, I'm not convinced about how profitable this segment is going to be. It's a really big bet. And by the way, Intel has taken on a massive amount of debt to make this bet. They currently have a net debt position of over $41 billion. So what do we think about Intel as an investment from here? What can we expect? Well, I think it's pretty hard to anticipate what profits for this company is going to look like in the future. But if we just take a kind of rosy view and we think that revenue growth is going to go back to, say, mid-single digits, if we think that after 5 years, their operating margin is going to come back to, 25%, and I'm not going to give them any credit for free cash flow over the next 5 years because all their cash flow is going to have to go back into their foundry business. And as far as a multiple, it looks like, over the past decade or so, they kind of were averaging maybe like 12, 13. If we give them a 13 times multiple, then you're looking at a 15% annualized return for the next 5 years. So that's a double on this stock over 5 years if these assumptions come true. But honestly, I think these assumptions are on the optimistic side. I mean, we're basically assuming that their turnaround is going to succeed, and I don't think it's a guarantee. Over the past month, I've presented multiple companies on this channel that I think can deliver over 20% every single year for the next 5 years, with assumptions that I would argue are more conservative than what we're putting in here for Intel. These are companies like Evolution Gaming. I think you can expect 21%. JD.com, I'm looking at more like 27%. Kaspi, this one we had at 24%, but the stock's actually up 10% from where we looked at it. So now you're looking at maybe more like 22%. I just posted a video on Adico Agro. Obviously, all those companies have risks, and I'm going to be wrong about some of them. But my point is, I'm finding better opportunities, and I just don't see a reason to put my money in Intel today. For me to change my mind, I think I would have to see either the price drop further, or I would need to see this turnaround story start to play out more. And if Intel shoots up from here, if the stock doubles and I miss out, I'm fine with that. Next time they release earnings, we'll probably take another look. And if you got something out of this video, subscribe. I think yesterday we hit 180 subscribers. So thank you to everyone who has watched the video. If there's a company you want me to look at next, leave a comment down below, and I hope to see you in another video.